India. But Dipan Mehta, director at Elixir Equities, is now with us. Dipan, on the road, it appears that there are a lot of Tata Motor vehicles, particularly on the EV front. So what explains this weakness that we've seen in the month of April? Do you think the best of the growth rates are behind? And anything that stands out for you in terms of the auto sales numbers as a trend, in terms of management commentary or numbers?
Yeah, good afternoon, Nima. Thank you for finding us. So I think that we have felt that premiumization. I mean, if you see Maruti is among the better players, especially if you go deeper into Maruti's numbers, it is more the premium models which have shown the growth rate, and the entry-level models you are seeing year-on-year sharp decline in the volume production. So even Maruti has a 6-7% of volume growth, the actual realization per vehicle sold will move up by at least 10-12% or so, and that's the story as far as Maruti is concerned. Eicher Motors, I think all the effort that they have put into expand the distribution network, that is now finally coming into play over there. And some amount of export benefit also, as all the exports were lower for this month. And I think Tata Motors is very difficult to understand why they should have lower sales in commercial vehicles. As I heard, that Ashok-Leyland and the ECV have both done well, so maybe management needs to explain why this sharp reduction is there. But nonetheless, Tata Motors is all about JLR. And so long as JLR is, running on a growth engine, the company's financial performance is generally fine. But I'm pretty much, I would say, satisfied with numbers that come from the auto industry so far. And it does seem that, partly base effect coming into play. And there could be some concerns because of higher interest rates. But I think if those headwinds are more or less tended to or try to recede over there, they may see at least high single-digit type of volume growth. But the average valuation per vehicle for the industry is going up phenomenally.
Dipan, just a brief comment on if you have any strong views, that is on the broader market itself. Not very far away from previous highs, but is it looking in a pretty strong shape for more meaningful gains, or it's going to be touch and reverse? What's your sense?
19,000 in May. That's the target. It's possible. The news flow on the corporate results fund is exceptionally good. Larger companies, index components have really delivered, with the exception maybe Infosys. And so far, whatever numbers I have seen, except for one or two companies, you're getting more ideas to buy than disappointment. So very optimistic on the market. I think if you have a little bit of push coming in from the FII, then you could easily see another 1,000-point rally in the next 2-4 weeks or so.
19,000, Dipan, in May. So no sell in May and go away. It's stay in May and make some hay. Perhaps that's the new theory, right? In case it plays out. Okay, stay on, Dipan. We'll have more questions for you. Another big theme, obviously, we're tracking in the market is this mega move in railway stocks. It's almost on a daily basis. Stocks like RVNL, of course, defying gravity. The kicker actually perhaps came in also from our conversation with BHEL today, because the BHEL management told us that there are at least 2 more large tenders in the pipeline from the Railway Ministry this year itself. And in any case, some of the other stocks, not necessarily in the same space as a BHEL or a RVNL on the wagon side, even some of the others are up and about. Vivek, take it away. These stocks have been the big stars of 2023 so far.
Well, you're absolutely right. And as you mentioned, the real kicker has been the fact that it's been the Vande Bharat tendering activity that's come to fruition that's actually aiding the gains as far as, these listed rail PSUs as well as, some of the private companies are concerned. Now, number one, the Vande Bharat opportunity in itself is quite significant. The first ordering activity of 200 train sets was close to 24,000 crore, which included both the delivery of the train sets as well as operation and maintenance activities. Now, what we understand is that there are going to be 2 more Vande Bharat tendering that will happen in the next couple of years. So another 400 train sets is what the government is likely to order, which is what is actually keeping the street quite optimistic as far as the order book prospects of these rail PSUs are concerned. Now, when you're talking about 2 specific names, RVNL as well as BHEL, remember RVNL emerged as the L1 or the lowest bidder in the first tranche of the Vande Bharat bidding. And along with that, the company also recently got upgraded to a Navratna status, which basically means that the company has increased independence in making capex plans. Now, when it comes to BHEL, we had the management on our channel today. So what the company told us was that along with being quite aggressive in Vande Bharat tendering, also what they're going to do is going forward, 50% of their order book is going to be from non-par segment, so which again is a significant kicker as far as BHEL itself is concerned. Now, talking about the stock movement of these companies in 2023, the relative underperformers have been IRCTC, IRFC and RailTel. But have a look at both of the stocks that have got the Vande Bharat order. RVNL up 73% in 2023. Titagar Wagons up 49%. BHEL again a relative underperformer, 3% higher only. But also along with that, names like RITES up 19% and IRCON up almost 38%. So really, the rail stocks have completely outperformed as far as 2023 is concerned.
The railways is looking at a complete overhaul of the signaling system. And there also we have started development work. We are looking to take a foothold in that market also. What the railways are doing is they are clubbing their requirements, they're coming out with mega tenders. And the last two tenders have been in the similar range also. So I think we are going to be there. We're going to be another another two tenders in this year, and there's more later on.
Stock like RVNL is up 250% in the last 1 year. IRCON is up 100%. Even this year, the gains for stock like IRCON are phenomenal. I think 70-75% higher. Dipan, no one's doubting the opportunity. I think what the managements are telling us and the pace of ordering from the railways is, no one's denying any of that. But purely from a market perspective, what advice would you put out given this kind of a mega rally? And also, does all of it look above board and not trying to insinuate anything over here? Or is it just, it's a bit of a herd mentality that's attached to these stocks now?
See, Surbi, we are in a nice upcycle as far as capex is concerned, and this capex is not just restricted to infrastructure, roads or highways, airports, but it is across the board. We are seeing expenditure taking place in the railways, and on the defense side also, I think we are seeing a lot of capex taking place. So this is part of the entire capex investment theme which we are tracking. And right now, I think all the railway stocks have moved up. They are at 10% up or so. But I think on corrections, I think these stocks can certainly do pretty well and give good returns to investors. But gradually, we are seeing very good order visibility and earning visibility for these companies. And next 2-3 years, I think they can easily deliver 15-20% type of top line, bottom line. And most importantly, a lot of these orders are coming in at very decent margins because the competitive intensity for the capex sector as a whole and railways in particular also has slightly receded. So I think very positive on entire railway space. And government focus is there on railways on and off. We keep hearing positive news flow over there. So maybe not today, but maybe 2-3 weeks down the line on results or when the market's a little softer, one could look at railway stocks. I don't think that they have run their full course.
All right, Dipan, we had a few managements today and some of the stocks are reacting very, very positively. So I just want to ask you about them. Do you track Datamatics? The management joined us and they sounded very, very confident. Revenue growth of mid-teens, margins of little more than mid-teens. I don't know whether you track it, but in the last 1 month, the stock is up 45%. Any views of that?
Sorry, Nigel, don't track the stock, although it's a very interesting, but has a very patchy record. So that's the reason why it's not on our watch list.
Got it. All right, taking that caution on board as well, but big move is what you see in the last 1 month or so. They're guiding for better numbers after delivering a fairly good set of numbers in the past year. But Dipan's view is in the past, there's been some bit of patchiness. So just keep an eye out on that. Dipan, I wanted to ask you about a couple of these cement names. We had Orient Cement today, as well as Kesoram Industries. Both of them joined us. And they are talking about good volume growth going ahead. Price increases haven't come about. But I was looking at pet coke prices and they have declined substantially. Just back of the envelope calculation, based on that only, it could save them 100-200 rupees or so. Your view on the cement stocks from here on?
Nigel, I'm negative on cement, and we've seen very decent double-digit volume growth for cement companies across the board. Yet the operating profit margins are lower because of higher costs. And that's because of increasing competitive intensity, and it's going to get worse with more and more expansion plans going on stream. So in my opinion, it's best to avoid the cement sector. Valuations are pretty rich when you compare to other commodity stocks. And the better play is in the cement consumers. I think we saw the way real estate companies came out with their numbers, and just watch out for the engineering construction companies also. Those numbers also be pretty good. So my preference is for the commodity consumers, the cement consumers, rather than the actual cement companies.
Dipan, Reliance, obviously today is a big day and we're expecting the approvals to come through for the demerger of the financial services business. All the details are in. I mean, we know it's going to be a 1:1. But what next? Because the stock is at a smart move along with the market rally from lows of around, I think, 2,200. We're looking at 2,450 almost on Reliance. Your thoughts?
See, Surbhi, you have to say that the timing is very good. All the NBFCs, the fintech, the financial services companies are in limelight and they have delivered good numbers and a lot of market attention is over there. And at that point of time, when Jio Finance will list, I think it will get a very good response from the retail and institutional investors as well. So my sense is that the stock is moving up in anticipation of investors wanting to get a pie of that particular company. It's got great prospects and it has a full muscle power, and the network effect also will come into play. So very positive on the stock, and this particular demerger, I think if it is followed through for the other businesses, then we will see a great value unlocking opportunity in Reliance Industries, and that can carry the stock price even higher from these levels.
Dipan, do stay on. Need to slip into a very short break. We'll come back and we'll also be joined by Amit Gupta of ICICI Securities on the other side.